Today I'd like to talk about the collapsing Japanese yen and its relationship to the Nikkei 225 index. Now, followers of the Asia Pacific short-term update know that the dollar-yen relationship and how it provides liquidity into the global financial system is an important part of seeing how Asia Pacific equities move. But specifically for the Nikkei, the first chart I want to show just compares simply enough US S&P 500 with the Nikkei 225. And you can see starting in 2021, the Nikkei has been underperforming. But this masks the bigger problem, which is the currency relationship. So let's put these indices on even keels, as it were, and look at both markets in US dollar terms. And here we see the effect of the very weak yen. It is destroying the Japanese stock market. Now, our concern is the short-term movements at the Asia Pacific short-term update. So our third chart shows in the recent weeks how this yen movement it relates to the Nikkei 225. And in February, just before and at the beginning of the European war, the currency relationship was stable. At that time, the equity market was falling. And then Japan decided, in a sense, to weaken their currency. And people really think that at a time when bond markets globally are getting hit, what Japan is doing is trying to save their bond market, but they're sacrificing their currency. Now, once they started to weaken the yen, and we see on the chart the sharp move higher in the dollar, the Nikkei responded and moved higher as well as this global flood of liquidity eased some of the war tensions. But in April now, we're seeing the continuing weakening of the yen. It's no longer bringing the Nikkei along for the ride. And our concern is what happens when the Nikkei and the yen finds even a temporary low and stages what will be inevitably a bounce. We think there is tremendous risk to the Nikkei at that point, and its downside acceleration is likely to be very sharp. I hope you join me on the Asia Pacific short-term update as we track this relationship further.